And welcome to Lancashire Innovation Festival. Lancashire Innovation Festival is an opportunity to showcase all the fantastic innovation support that is available across the county of Lancashire. We're coming up to the final few days now, and we've still got several more sessions still to come. Plenty more conversation about innovation, and we'll find out more at lancashireinnovationfestival.co.uk. We hope you can join in with the conversation today that we've got coming up. If you would like to engage with the conversation, then please do use the chat function. Tell us about where you're from, your interest in innovation, what it is exactly you do, and any thoughts that you have on the conversation as it unfolds. If you've got any questions too, then please do use the box marked Q&A to pass your questions over to the panel, and these will be addressed towards the end of the conversation. The conversation, of course, is not just here. You can follow all the chat on Twitter using the hashtag LANIF2020 and also on LinkedIn. Okay, so without any further ado, I'm now going to pass you over to Gaynor, who is going to lead this afternoon's conversation around finance for innovation. Gaynor, panel, over to you.
Thank you very much, Daniel. Good afternoon, everybody. Really pleased to be hosting this session this afternoon on financing innovation. I'm a member of the Lancashire Innovation Board. I'm really pleased to be speaking to everybody here today. I'll introduce everybody in the panel, or ask rather the panel to introduce themselves in a moment, but just by way of introduction to myself. As I said, I'm a member of the Lancashire Innovation Board. My day job is currently with British Business Bank, working with a number of lenders who are actively lending and investing in businesses, particularly with the coronavirus business interruption loan schemes. But my career to date has been in finance, SME finance, since I went into work. Starting a career at Yorkshire Bank, where I sort of time served 18 years in banking before moving into various advisory and professional services roles, working across debt finance and equity finance as well. But we've got a fantastic panel today, a real mix of business owners, entrepreneurs, professional advisors, but everybody on the panel has got experience in finance and innovation. So I'm going to ask everybody to do a very quick introduction. And if you don't mind, I'll start with Angela. So Angela Smith.
Good afternoon, everyone. Angela Smith from RTC North. We're an innovation management company. We help SMEs in particular to drive their growth ambitions through harnessing their innovations. We do that through delivery of fully funded programs, one of which is the Innovation and Growth Services funded by Innovate UK, as well as the Enterprise Europe Network.
Thanks, Angela. David Reardon.
Hi, I'm David Reardon from Bloomerbox Limited. We're a family-run design and manufacturing business based in Burscough, Lancashire. We specialise in plastic injection moulding and work in industries as diverse as floristry, sports nutrition and security products. We have a full computer-aided design facility as well as advanced CNC controlled production. This complements our production facility, which uses energy-efficient machinery and advanced robotics, which will allow us to run many of our production lines unattended. We also have a strong ethical policy to use recycled materials in our product ranges where possible, with the ethos of designing products with more than one life. Thank you.
Thanks very much, David. David Hawley.
Good afternoon, everyone. It's David Hawley from Grant Thornton. I'm a director in our tax team. Grant Thornton provide accounting, tax and advisory services to a whole host of businesses, both nationally and internationally. I personally work with businesses from startup through to large international businesses and listed businesses, and typically work with businesses through their growth phase, and particularly when they're doing things like R&D tax relief and looking to incentivise members of staff.
Thanks, David. And Amin.
Hi, my name's Amin Vepari from Lancashire County Council. I oversee business finance and scale up across the county. This includes overseeing our access to finance service, which is delivered by the Growth Company and enables businesses to access funding, support and access to various different services across the funding landscape. I also oversee the Rosebud Fund, which has been in existence for over 33 years, and it's Lancashire County Council's debt finance fund for growing business. Thank you.
Thanks, Amin. Jane Coleman.
Good afternoon, everyone. My name's Jane Coleman, and I am part of the management team and an investor in Dykes, which is a diamond cut alloy wheel repair and refurbishment business. It's a relatively new business. We've accessed funding in many different ways, and my history is with coffee. So moving into wheels was very different, and we've managed to work our way and find our way through different ways of funding. So my experience is coming from the base of the business and our journey through trying to find the best way to fund our very, very fast growing business.
Thanks, Jane. And last but not least, Maria.
Hi, I'm Maria Ramsdale. I'm from FW Capital. I predominantly cover Cumbria and Lancashire. I assist my colleagues Andy, Trainer, and also Jamie, who's just joined us recently, Jamie Grimshaw. A bit like Gaynor, I've got a background in finance and I've worked for FW for the last 3.5 years. We do loans from 100,000 to 750, and like a lot of provision at the moment, we have got a CBILS loan. So anybody that has been interrupted by coronavirus and is needing funding, we can support you. With regard to that, obviously we've got a small deadline just for anybody that's wanting it by the end of November. We're absolutely inundated with applications, which is great. So what I would say is anybody that does want finance of above 100, if you want to drop Gaynor a line later or drop somebody a line and then point them in my direction. We are looking for established businesses. I'm not saying we don't do startups or early stage, but predominantly they are businesses that are established, because we need to prove that you can actually repay the debt over that period. So it's not an equity product, it is a loan product. So again, if anybody wants any information, just drop us a line at the end of this. Thank you.
Thanks, Maria. Okay, so very mixed experiences and different backgrounds on the panel today. And obviously the topic is about financing innovation. So the conversation really we want to hold today is how accessible is finance for innovative businesses? We'll hear from David and Jane shortly about how they've managed to finance their businesses and their experience in that. But during the session, if anybody's got any questions, and if you want to raise them directly to a panel member or just a general question, then please just drop them into the Q&A box. And when we've finished, sort of probably 30-40 minute conversation between the panel, we'll pick up those questions with you directly. So I think if you don't mind, I'll go to David and Jane first, just to start the conversation and hear your experiences. As business owners and entrepreneurs, how have you managed to sort of look at financing needs within the business, and how challenging or not has it been to actually secure the finance you need to take your innovations forward? If I start with Jane first, if that's okay, do you mind sharing that experience with us?
Yeah, of course, of course. So Dykes started with 2 school friends who saw a gap in the market. One was in automotive and one wasn't. And they started with a single van and an idea and seed capital, which was raised through the SEIS scheme of 69,000. So they had some initial investors, which got the business off the ground. As the business grew and they had to get bigger facilities and more equipment, they then started to use asset finance. So as they got each piece of equipment, they would raise asset finance through a broker. So they had no idea what was available at all. And this was the part of the business I came in and invested through the EIS scheme. The light bulb moment for us was when we moved to a bigger premises and we did an opening session, and the person that came over to do the opening was Sir Lindsay Hoyle, who was our MP. And at that meeting, he spent the full day with us. He was exceptional and started to introduce us to some of the funding that was available through Hawley and Lancashire. And it was a real, as I said, light bulb moment for us. So the first part was with Hawley Council, and we started to raise money through the Hawley Big Grant, which was for equipment. And as part of that grant, we have to give back to the community, and it's linked to jobs. But because we were a growing company, it enabled us to get a £10,000 grant for equipment. That was a relatively easy process. But the other thing that we found when we were raising capital was the quality of financial information for the business had to be really strong, and ours was not strong. So we changed accountants, and the accountants that we had delivered for us really detailed monthly P&Ls, balance sheets, and profit forecasts. And that's been a real game changer for us. We were also introduced to Caroline Turley, an access to finance specialist, who has been exceptional. At finding the right people that know all the things that we don't know, has been a massive boon to our business. She has guided us through some areas that we really didn't know existed. We've worked with Made Smarter and brought technology into our business through the Advanced Manufacturing Research Centre, and we've managed to raise £35,000 with them. We've borrowed with Rosewood Finance, which has been an excellent route for us to support the growing business. We've also got R&D tax relief by using a consultant. We've now applied for CBIL funding as the business grows. Obviously, we have business interruption. We were closed for 8 weeks with the recent changes. The advice that I'd give to anybody is start talking to people. We struggled, and we got local finance from people we knew initially, but it was the introduction to people like Lancashire County Council, Access to Finance, Made Smarter, Surely Big Grant, which has really made a massive step change in our business and enabled us to grow to, we now have 21 employees, and we are in the process of moving to our 3rd unit. We've now diversified, and we have another business, a sister company called Smart Techs, which is around vehicle repairs. And in November, we opened Tyre Techs, which is a 3rd company. So without the help that we'd had from Ryan, Caroline, and all the other bodies that have really supported our growth, we wouldn't be in the position we're in now. And it's been a really positive experience.
Thanks, Jane. I think it's quite a journey, starting off from your seed round and your seed enterprise investment scheme,
That's
through to grants, loans, Rosebud, local government support, all council support. Yeah, a real journey, and different cocktail of finance as well along the way.
Yeah, we've definitely learned as we've gone along.
Yeah. David, does that resonate with yourselves, or do you have a different picture?
We're probably a little bit different. We're obviously still fairly a small company, but we grew initially fairly organically. Our first setup was done with the Carbon Trust, where I used Carbon Trust loans to acquire new energy efficient equipment. And we've worked more around trying to build the knowledge in-house, so we subcontract as little as possible and focus on the bits that we could do. And that's meant that we've kept our cost base down. So nearly all of our machines were funded with Carbon Trust trading. When that ended, we were forced to go to the standard market, which would be your standard asset finances. Going forward, that is a lot more expensive. The Carbon Trust was very efficient and very easy to use. And grant-wise, we've had relatively few grants. We've really just reinvested the capital as we've moved forwards. Recently, we've been successful with an Innovate grant for the COVID response, which has been a tremendous help. And we're working now with lots of local grant agencies, the Made Smarter and so on, to access funding that's available to enable us to grow. So we're probably somewhere behind Jane, but in terms of our knowledge, we have a great deal of knowledge, and we're now looking to expand that. But we're doing it with the latest technology we can find, the latest training. And we've always had a concept of sort of re-educating ourselves as we go along. So if something new comes along, we think, right, we'll get involved, find out how it works, rather than just sort of sticking our heads in the sand and saying, oh, we'll stick with what we've got. But it has been a mixture of both. So we've got the Carbon Trust, traditional funding, bank loans, etc. And now moving forward, we're obviously trying to access as many as the financing, which do seem to be more readily available at the moment.
Okay. So I'd like to just pick up on a couple of points that you both made, was about being able, also the different types of finance and how how you get to know about this, the funding that's available. I know, Jane, you mentioned that you've had some support from the Access to Finance team, I think from Caroline, but do you think that's typical of businesses? How easy is it for companies to be able to trawl the web, trawl various places to be able to find and access this finance? Perhaps Angela, do you have any views on that, or Maria?
Certainly, from our experience of working with a lot of innovative companies, all working in different sectors with different technologies at different stages of their journey, the commonality is that being able to navigate what is quite a complicated landscape. You look at the different types, I mean, we've already mentioned so many different types of financing today, from R&D tax credits, which incidentally people really either underclaim or try and claim everything for. There's grant funding, there's investor finance, there's so many different types, and it's navigating and understanding what these different types of financing, what they do, what they're capable of doing, and how they fit into your business strategy at that point in time. For example, if you're looking to buy capital equipment, an R&D grant isn't going to do that for you. You need to look at something else. And equally, unless you've got internal resource, an R&D grant, it's great to support your R&D pipeline, but it's not going to cover all of your costs. So you need to think about what else you need to add into that mix. And I think there is something to be done about helping SMEs in particular to navigate that landscape, understand what's available, when it's useful, and perhaps more importantly, when it isn't. You can waste a lot of time and resource chasing after financing when it isn't the right financing for you at this present moment in time, or for what you want it to do.
Yeah,
I would just mirror that, exactly what Angela said. One of the things that's really important that businesses consider is when they're applying for different finances, each product will look for something different. So, if you're looking for equity finance, they're going to want different numbers to debt finance. Again, for grant finance, they're going to look for different outcomes. And again, going back to what Jane said about not having any support from the accountant and now having a really good accountant, that makes a massive difference. But at the same time, their accountant has to know how to raise finance, because they might put a tailor-made plan for that particular business. It is great for them managing the business, but then when it comes into a funder, it's not in the normal format. And therefore, if the funder's got to unpick it, it's going to be harder for them to do it. So it's about having the information there, but being able to put that to a funder in a way that that funder will be looking for it. So again, it's different figures that we'd be looking for. I'd be looking for debt servicing to make sure a business can repay it, where an equity funder is going to look at rate of return. If they put £100,000 in, how much they're going to get back out of it. And that's the advantage of working with Access to Finance. They will help and support that and say, well, actually, for that, you need to tailor. You've got a standard business plan, but for each particular thing that you're doing, you need to change that. Very much what's really important is picking up what Jane said before as well, is the management information, the fact that a business can produce monthly information. That's a big plus, because you need to, especially with a growing company, you need to be able to see it on month by month, how that's increasing. But yeah, I would just say that the more information you've got, the better, but using a service like a broker or Access to Finance, because it's the same information, it's just presented differently depending on where you're applying. And it's dealing with somebody who knows how to pull out the bits that go for one application that won't necessarily be applicable to the other one.
and I presume, David, Hawley, that applies with R&D tax credits as well, presumably. A lot of people know what they are, but do they necessarily know how to apply for them and what they might be able to access or not?
Yeah, absolutely. Again, Jane's already mentioned that they raise finance through CDIS and EIS, which are typical ways for equity finance to raise funds, and businesses can position themselves better by making sure they're eligible for those reliefs to make themselves more attractive to investors, as Maria just mentioned. But in terms of R&D, a lot of clients claim it, or a lot of businesses claim it. Sometimes they underclaim, and they're not necessarily looking at all the projects. So typically, where projects maybe have not achieved the desired outcome, that can still qualify for R&D tax relief. It doesn't have to be successful, which is a common area of mistake. And similarly, what we found in the COVID lockdown period is businesses who have previously dismissed the fact they can claim R&D tax relief, and now re-looking at it and realising that there is scope to claim it and to take advantage of the scheme. Because for an SME, the benefit can be potentially up to 33 pence for every pound that you spend on R&D qualifying activities. So significant value, cash back into a business to help fund either the ongoing business operations or indeed the R&D and the innovation that businesses are seeking funding for.
Yeah. So, Amin, I was just going to come to you and say, is this something that you commonly hear from businesses across Lancashire? It's sort of navigating that maze of funding options and really having it's not necessarily the know-how, but it's the time and the resource and sort of to put together a package to go to a funder. Do you find that's a common theme?
Yeah, 100%. And I think listening to what everyone else has been saying, I totally concur and agree. Finance and funding quite often gets dissolved as part of general business support when really it isn't. It's a lot more complex. Just the fact that debt and equity in itself is just two overarching themes, but there's so much beneath that. I think what Jane mentioned was very apt in the sense that what you don't know, you don't know. When you're busy running your business, that's what you're focusing on. We're quite fortunate in Lancashire that we opted a few years ago to have the access to finance service operating in this area. And not a lot of areas have this service where we have a team of people who have got funding, finance, banking experience, background, and their role is they don't have access directly to funding, but what they have is they have the relationships with people like Maria at FW and various other people across the county and beyond, so that they can understand what a business's needs and requirements are, save the time and the hassle for the business, help identify the right funding packages, and that doesn't always necessarily just mean one funding option. Quite often it can be a cocktail of different finance packages, and help the business to develop their business plan and cash flow forecast. So all that prep work that needs to be done for a funder to look at, all that is in a way kind of assisted by access to finance, and also help with the application process as well. So, you know, the service itself, which is completely impartial, and it's there to make sure it's the right funding and the right finance of the business, is absolutely crucial. And you know, a good accountant is great at what they do, but again, I think working with brokers, working with the likes of access to finance, just really helps to simplify it. And it's an ongoing challenge, Gaynor. You know, it's not something which has disappeared. I think COVID has highlighted probably more clearly where the issues are. Yes, Seabills and Bounce Back has been very, very, I guess, different people have different experiences, but they've been well publicized. But there's so much more out there as well. And as we look towards the end of Seabills and Bounce Back, and you look at what's next, you know, there are many, many different funding pots which, you know, we can help assist through people on this panel and services like access to finance to help businesses not spend that much time, but actually work with someone that can enable them to do that.
Yeah. So it does sound like it's really important, you know, and helpful as well, because obviously you've got businesses to run, Jane, David. Raising finance is not, well, hopefully not a full-time activity for you. You have your day job to do as well. And I was just thinking, if obviously you've both been successful and you've raised finance to get you to where you are now, if that hadn't been the case, would it have hampered your ability to innovate within your companies?
Certainly from our section, yes. The project we went with Innovate was at the beginning of the year, and we'd thought of, ridiculous as it sounds, the concept of people wearing face masks in public places, and created a design for a reusable one. But the costs were, for a gamble, were outstripping it. So what Innovate's competition that they ran, without that funding, we wouldn't have been able to do the project. So most definitely it allows you to launch forward.
So it takes away some of that risk element for you.
Yeah, because otherwise everything you're putting in something for, not all new projects work. They don't necessarily get to market. There'll be complications along the way, and approaching into a sort of scenario with the virus, it's difficult to say, well, we'll risk all of that money on that one particular venture. So having the ability to have that and somebody step up and say, well, okay, we'll fill that gap. You don't get it, you know, you're still spending your own money as well, but it does cushion the blow. And it does, if I'd gone to a bank and said, please loan me the money to do this, or other funding, they probably wouldn't have been that keen. So no, I think it's very, very important.
Yeah, I would completely concur with that. It's been massively important to us. We've had the ideas to grow. We've gone down the normal route of going to the banks. Banks wanted lots of information, lots of time, but didn't give us a lot of result. The one thing that we found with the people that we spoke to, especially with access to finances, we were really surprised how quickly they assimilated the needs of our business, understood our business, and then helped us to realise the ideas that we had. What we didn't want to happen through COVID was that it would slow our progress. We wanted to make sure that we looked after all the team. We wanted to make sure that we supported them and their families, but we also wanted to make sure that they'd got a great business to come back to. So accessing finance and as you mentioned earlier, the R&D tax relief really helped us through. And now we're accessing finance to help us to grow into the new unit, which brings more jobs, more security for our teams. And without the help and support we've had, we really would not be in this place. We'd still be struggling probably with the banks, having endless conversations and not understanding when we've got a successful and profitable business, which we're taking very low drawings out and reinvesting everything we have in order to grow the business, why they just really didn't understand. And what we found with the support that we've had from Hawley, from Lancashire and from all the advisors is a great deal of listening, of understanding and assimilating what we needed. It felt like we were speaking to somebody who understood rather than someone who was just trying to pull the rug. It was very different.
Yeah. So just wondering then, following on from what you've both said there and what the panel have said so far, do you think there are any gaps in the funding market for businesses when it comes to innovation? I mean, not debt isn't right for everybody, equity isn't right for everybody, grants sort of come and go. Do you think more could be done? Or and Amin, is this something that Lancashire is looking at, if there is more that could be done? Just panel views on that.
Yeah, sure. I mean, we're already kind of at the moment assessing where things are at. I mean, obviously the government back support has been primary in the last few months, but as it stands with Seaballs and Bounce Back finishing towards the end of this year, you know, we've got still a substantial pot of money in Rosebud, for instance, which we want to lend out. We've improved the terms of lending. We've changed in terms of before we only used to lend to priority sectors. We've dropped the priority sectors now. We've brought in various other elements as well to make sure it's more appealing. Same with the Northern Powerhouse Investment Fund and anything through the British Business Bank and other funders as well. And I think that's what's happening at the moment. I think what we've got is we've very much gone through recovery and resilience stage. And I think we do have to look towards growth and innovation. And I think part of it is around innovation specifically. I think it helps when you've got a funder that actually listens to what your business model is and what you're trying to achieve. And certainly with what Jane mentioned, I'm not trying to be critical of the banks in any way, but it's generally system says yes or no kind of response. Do you really have someone trying to understand your ambition, your aspiration, what motivated you, what your USP is, where the opportunities are? And I think what we're willing to do is further reinvest within our access to finance service, work more collaboratively with the funders out there to ensure that whilst there are pots of money, and trust me, there are lots of pots of money out there at the moment that do need to be lent out, it's a case of let's make sure first and foremost, beyond anything else, we understand the business model and aspirations. We can't just keep saying, right, okay, you're going to create X amount of jobs in the next 3 years. Well, a lot of people don't know where they're going to be in the next 2-3 years, let alone how many jobs they're going to create. And I think it's about that story and narrative that we need to understand, which I think through the COVID period has enabled a lot of advisors to be able to do this better as well. And our focus is to make sure we carry on doing this, listening to businesses where the gaps are, and make sure above and beyond anything else, we take the time to listen to what the businesses need and make sure we find solutions for them.
Yeah, that probably resonates with you, David Reardon, is it? Because obviously a lot of these grant schemes are about job creation, but I know within Blooming Box you're looking to grow and expand, but an awful lot of what you do is about efficiencies and automation as well, which might not be a direct impact on new job creation.
Yeah, and actually I was just going to pick up on what Amin said there, is that a lot of the old sort of regional selective system schemes were all based on how many jobs you created, or was got, you know, pound for pound based on the number of jobs. And I think a change in direction would be very helpful, so that you build the business and we have a diverse range of business. It's not just one sector. For example, we've concentrated largely on hospitality over the last few years, and obviously nobody was expecting the COVID, but it has hit a massive part of our economy. Whereas if we had a much more diverse sector, we'd be able to respond better to situations. You know, we shouldn't have all manufacturing, all banking, all service sector. We should have a good blend. And if you don't tie it purely to jobs, but you look at this much longer term investment plans, I think would be a great help. So that, I think what Amin's saying is very positive.
David Hawley, in your experience of those companies that you work with on the innovation side and with the grants, do they typically fall into one sector category? Do you see sort of a trend of only certain types of businesses that understand the source of funding that R&D tax credits can apply, or do you see more broad brush now across different sectors? Are there still gaps?
There's definitely, the education's improved and more sectors now, pretty much any sector can have qualifying R&D tax relief in, for example. But I do think what people have said in terms of access to funding, you know, it's important that those support mechanisms continue. I appreciate this isn't about tax, but a lot of the clients I work for are entrepreneurs, tech-based businesses, and it's important that things like entrepreneurs relief stays around. Obviously, it was cut back in March in the budget, and there were rumours that was going to be cut again. I think it will stay, but I think that's really important that incentive's there from a tax point of view, which then couples with the access to finance that those businesses need. And I do think businesses struggle to get access to a finance without the sort of business plans in place that Maria talked about before, and making sure they know fully what their business model is, what the output is, and what investors or banks are going to lend into to make sure they're getting a return on that.
Yeah. And Angela, is it the same in your experience? Do you see all sectors understanding the innovation landscape, and that, you know, it's not just innovation just isn't about laboratories and very high tech. Innovation goes right across and within all different types of businesses?
Certainly we see, as I say, cross sectors, all stages of the life cycle, companies working on so many different types of technologies in so many different areas. And certainly there is more cross-cutting when it comes to innovation. I mean, an example is digital health, cross-cutting several different areas. And we're seeing that more and more, which obviously means that the financing that people are looking for is becoming, shall we say, more complicated, because they've got this more complicated innovation landscape. And I just want to pick up what various speakers have actually already talked on, which is making sure that that financing fits into your business strategy and your business model. There's an awful tendency, because the funding landscape is so complicated, particularly when you look at grant funding, there is the temptation to chase the money instead of holding back and going, does this particular piece of funding fit into our business strategy? Is it going to help us achieve what we want to do long term? So I think there's work to be done about that. I think the funding landscape itself, I think, is becoming more responsive. We've seen that particularly with COVID. We saw lots of different financial packages aimed at different stress points that businesses were facing. So that came on stream quite quickly. So the marketplace, if I can put it that way, can be quite responsive, can be quite adaptive. But there is also the emphasis on companies understanding their baseline strategy and how funding fits into that, and then finding funding that matches that strategy from whatever source it is, rather than chasing all the time.
Oh, that's interesting. Thanks, Angela. And Maria, I was just going to ask you as well, I understand you're inundated with applications at the moment, and I appreciate you taking some time with us today. But are the applications that you've seen for the CBILS, the coronavirus business interruption loan scheme, have you seen innovations being funded through that scheme? Is it more sort of a survival situation, or are you seeing companies coming to you with new ideas and perhaps having an opportunity to go forward?
Yeah. with both really, because what we've got is obviously the whole point of the scheme is where a business has been affected by coronavirus, but it's unusual for us to come across a business that hasn't been affected in some way by coronavirus. So as long as we've got that link, but of course, as well as that, businesses are growing. So even though they might have been on a growth plan and then that stopped because of COVID, and now they're picking that up. So as part of that, there's a bit more innovation, a bit more new technology, new methods. So yeah, it doesn't, just because it's a coronavirus doesn't stop us investing because it's an innovative business. At the end of the day, it's all about, can we look at the facility? Is it affordable? And is it going to do the right thing for the customer? But it's very unusual not to find a link to coronavirus to any business. I mean, I've got one that I was doing yesterday. It's one they're an online retailer. They've had the best year, as you would imagine, as an online retailer, but that's come with some big challenges for them with social distancing, extra staff that they've had to bring in. So even though their profits have gone up, they've spent a lot more than they would have done pre-COVID. So they're hitting their growth numbers, but their profitability is hit by that. And again, they were hoping to bring in a new like pick and pack system, which they've not been able to do. So they've had to put that on hold. And again, they're looking for some new innovations. So now they've got some funding, they can go out and do that.
Okay, well, thanks, Maria. That's interesting. Before we move on to the Q&A, we've got a couple of questions come in, but just before we do that, I'd just like to go around the panel again and just ask, from your experience, or what would you either give advice to a business to regarding accessing finance for innovation, or from your experience of raising innovation finance, what would you do differently, or again, what advice would you give to somebody in your shoes? Who shall I pick on first? Any volunteers, or shall I just pick a face? Jane, do you mind if I come to you?
I don't mind at all. I would say that talk to people. Definitely talk to people that access to finance. Go through your local MP or your local county council. Just have a look online, see what your county council offer, and explore and start talking to people. The amount of knowledge, expertise and support that's out there is phenomenal. And our first year of business, we didn't access anything. We just grew at the rate we could afford. So as we made money, we invested money. As we found people that would invest through schemes, then we would grow a little bit more. But at the point that we took advice and started to understand how we could realise the plans that we had with support, then it was a real game changer for us. And then the other game changer was make sure that you've got a great accountant. As Maria says, that you've got to change the numbers to suit the particular funding criteria. However, if you've got it all there and ready to go and in a format that you can use easily, it makes the form filling, which can be quite long, a lot easier. So that would be my advice.
Okay, thanks, Jane. It's good advice. Angela, perhaps thoughts from yourself?
To be honest, I'm going to echo a lot of what Jane said. There's a lot of support out there for businesses. Certainly there's the programs that we provide, there's programs that a lot of other entities provide. Do talk to these different programs, do get support from them to navigate that landscape. Talk about your business strategy, identify, have it clearly mapped out, find the funding that matches that strategy. That will give you a much greater chance of being successful in getting that financing in place.
Thanks, Angela. David, Reardon, perhaps.
Yeah, I would agree with the get your figures right, have them in place, but I would also agree with what Angela said earlier on, which is go for the one that works rather than chase. I think look at everything, always have an open door policy and say, yes, I'll look at that, I'll review that. No, that's not for us. Yes, that's for us. That might be for us, but pick the one that works, not just go for absolutely everything you possibly can. So I think what she said is very true. Look at it all, but target the one that works best for you.
Yeah. Yeah, you can spend an awful lot of time trawling around funders that are never going to be a good match for your particular business.
Look at them. Sometimes she said you can waste far too much time doing something that got you nowhere anyway. So go for the one that gives you the biggest value. Difficult to do sometimes, but that would be my best advice.
Thanks. David Hawley?
First of all, I'm really appreciating the love for accountants and having good accountants on this today. That's good to hear. I'd echo that though. Ask your accountant if you're not claiming R&D, or if you have claimed R&D, make sure you're maximising it. If you haven't claimed it, can you do it? There's a scope to claim. And just to reiterate, there's 2 years that you can go back to. If you're December year end, December 20 coming up, you can still go back to December 19 and December 18 year end, as long as you make your claim before December 31st December 2020. You can still go back and get that cash back potentially from HMRC, and that applies to loss-making businesses as well as profitable-making businesses.
Thanks, David. Maria.
I would say the best thing to do is have a chat with the funder at the start. So I'm saying on a funding perspective, ask what they're looking for, because what you said, Andrew, is quite right about it's got to be the right match for the business. It's also got to be the right match for the funder, and therefore having that conversation very early on of what they're looking for, how they want it presented, how they'd like it, that does speed up things, because as I say, they're all different. So the more communication you have, the better at the very start of it, and just picking up the phone sometimes and saying, you know, what are you aiming for? What do I need to do? What do I need to show? And again, if we've got access to finance, that does help, because it's a middle person. And the more they do, and again, we deal with a lot of brokers that know exactly what we're looking for. So when it comes in, it's so much easier for us, because the brokers have been used to dealing with us. They know their businesses, they know what we're looking for, and we can just bang out the application really quickly because it's presented in the way that we need it.
Thanks. And Amin, thoughts from yourself?
Yeah, sure. I think everyone between them have kind of covered off all the key points. I think very much, again, what has been said is speak to people. Don't underutilize things like LinkedIn. You know, utilize that network, especially as a virtual digital network where you can ask for information and people point in the right direction. I think from a county perspective, I think there's certain kind of platforms like Lancashire Business View, Boost Business Lancashire. You know, knowledge is a lot at the moment, and certainly kind of keep up to date with things. For instance, in Lancashire Business View, we've committed now to an article which is a funding feature, double page spread, which is all focused around funding. So again, that's giving you information, that's pointing in the right direction as well. But yeah, just speak to people, because I think 2021 is going to be a really interesting year. You know, if you look at the businesses at the moment that have accessed CBILS and Bounce Back, I think we've got 50,000 SMEs in Lancashire, of which 30,000 have accessed debt funding through CBILS and Bounce Back. That's nearly 60% of our businesses have already accessed that, to the tune of 1.2 billion. You know, there is a funding need even going forward. We've got to be careful we don't get saddled with too much debt as well at the same time. Equity is going to be a viable option, and I think there's so much out there. Speak to brokers, speak to funders, speak to access to finance, and really get advice from people and use people as a sounding board to get you in the right direction.
Thanks, Amin. Thanks. So some really interesting conversation there, and we're going to move on to Q&A now. So if anybody in the audience has a question, then please just use the Q&A box and drop us a line. But just picking up a couple of the questions that have come in so far, one of the topics we haven't actually covered is crowdfunding as a source of finance. And somebody's asked the question, should startups consider crowdfunding to grow their business? So just wondering from the panel, has anybody used crowdfunding before, seen startups engaging in the crowdfunding space, and has that been successful?
I have dealt with crowdfunding, Gaynor, on my access to finance days. For certain business it works fantastic, and other business not so good. It depends on what a customer's looking for or what the business is looking for. What I would say is it can get very difficult with a crowdfund if you then want to go and invest later, because obviously you've got a list of maybe 100 different investors that have put £2.50 in, and when you're trying to do that as you get older, that gets a bit harder. So it's not always ideal going forward, but it really is just a case of the individual business. And again, with the access to finance team, we've dealt with a couple of good crowdfunded. I dealt with a really good manufacturing business that crowdfunded. And they did it in a very unusual way. They'd had a lot of interest about their products right the way throughout. So what they did was they actually showcased it, and anybody that they'd spoken to over the last 3 years leading up to that, they got them all round and everybody put some money in. But obviously you've got your traditional crowdfunding platforms as well. But I would say it's like we've just said and keep repeating, it works for some, it doesn't work for others. So just take advice, speak to your accountants, speak to somebody that's done it before. That's a really good thing if you can find somebody that's crowdfunded before, because they can tell you the advantages and disadvantages, or speak to a broker or somebody that specialises in crowdfunding. So for example, if I've got somebody interested in that, I've got a particular lady that I would deal with, and I would send it to her and say, I've got a business interest in it, can you deal with it?
David or Jane, is that something you would ever consider for your business or have ever thought about in the past?
It's not something we considered. It would, I think the complexity of it, of having that many investors in the business, I think may prove too complex for us. I think it might detract from the growth of the business, because of the funding that we have, we can focus on looking after the business, looking after the customers and growing the business without having to think of the communication that we'd have to have with a number of funders. So that's not something that we have, and I don't think it's something that we would consider.
Okay, thanks, Jane. Another question that we've got is about sort of in our geography in Lancashire, perhaps high quality growth startups struggle when it comes to funding, especially the further away you get from the big cities. So are businesses in Lancashire, or is this region at risk of losing innovative businesses to the likes of Liverpool and Manchester, where it's maybe perceived that there are more opportunities to raise finance, perhaps where the funds are, where the investors sit? And if that's the case, how do we meet this challenge? Perhaps, Amin, do you have any thoughts on that with your Lancashire Council head on?
It's funny you say that, because that's exactly one of the areas we're currently working on at the moment. All I keep hearing from everyone is there's a lack of early stage equity investment opportunities in Lancashire. And I think there's quite often with equity funders, it's almost like they're looking for the ready-made businesses that are already kind of doing phenomenally well, etc. And I think everyone's got to start off somewhere. Quite often people look at crowdfunding as an alternative because they can't get equity or debt elsewhere, so they look at crowdfunding as an option. Now, what really is interesting at the moment is that with regards to startups, we're always going to see more startups come out of any kind of financial difficulty and situation that we're kind of experiencing now. And what we found is that there's actually a lot of options out there through various schemes, through whether it's innovative visa schemes, which are at the moment doing fantastically well for early stage equity investment opportunities, and a whole host of other things out there. One of the things that we're really focused on at the moment is to say that by the end of this year, going into 2021, we want to have a very, very clear map of businesses at each cycle and stage, whether that's startup, stable, growing, scale up, exit, whatever it may be, and actually kind of very clearly have a plan together of how we will tackle that. So we already have a number of kind of organisations. So we work very closely with University of Central Lancashire. Got their own investment readiness program, which is an absolutely phenomenal program, really helping early stage equity businesses, pre-seed businesses with getting equity investment. We've started to relaunch our Lancashire Business Angels and Bay Business Angel networks. We had one last week and we've got one coming up in November, which again, we're working with businesses who want to get investment into them. And then there's obviously the debt funding and finance as well. So there's a lot going to be happening in this space, and we'll be utilising the digital platforms that are available to us and the networks that are there to make sure this is amplified. And I think above anything else, it's kept simplified for businesses as well. So there's a lot of work going to be going on in this area in the next coming weeks and months.
Okay, that's great to hear, Amin. We don't have any more questions in from the panel, so I think I'll probably wrap it up there. But I'd really like to thank everybody for taking part today. And just to sort of summarise what you all said, and really appreciate your input and your advice. Some of the points that you raised, just as sort of for the audience to take away. was about taking advice, taking advice from your accountant, from your broker, from various services that are available that can provide guidance and support when you're looking to raise finance. The importance of preparing good information, and again, getting support with that if you need to. Finding the funding that matches your business strategy. Maximising R&D tax credits and grants if they're available, and exploring if they are, and having that dialogue and the communication with funders at the outset is really important. So some great tips and hints and advice for people on the session today. So with that, I'd like to thank you all again for taking part in today's session, and I will hand you back now to Daniel just to close the session for us.
Thank you, Gaynor, and thanks to all the panel for a fully insightful session there, and lots of really strong practical knowledge and advice there about how to finance your business for growth. Especially important now, of course, coming off the back of the challenges that so many people have had. So really useful, and thanks once again to all of you. As we come out now from today's session, we've got one more session this afternoon, the Red Cat Showcase into low carbon innovation. And then we go into the final 2 days, a focus on medtech tomorrow, agri-tech, and then Friday's look at innovation ecosystems, and then a vision of the future for Lancashire. In the meantime, thank you everybody for joining us, and we look forward to seeing you again soon. Thanks, and bye for now.
This October, you're invited to explore how you can harness innovation, consider new viewpoints and fresh ideas, and explore how learning, technology, and innovation can come together. This brand new festival will champion some of Lancashire's latest innovations across 25 events, hosted by more than 50 speakers, including some of the county's innovation experts from higher education, health, clean technologies, and many more. You can see the full schedule and register online for free at lancashireinnovationfestival.co.uk. So join us for a month of inspiration, collaboration, and discovery around innovation.